For this week's Editor's Cut, I want to bring on Martin Piers and Corey Weinberg to give us their view on all of this. Martin, Corey, welcome back to the show. It's great to have you here.
Hey, Akash.
Hello.
So, Corey, I want to get into this list, but before we get into any names in particular, the broad question I want to start off with here is, should these companies all even be going public right now? You've been on the show in the last few weeks talking about, I don't know, the 2025 slate was like not that great in some cases, right?
Yeah, I mean, it's definitely a slate of have and have-nots to some degree, but that's kind of been the IPO slate the last few years. It's been a lot of venture-backed tech companies that have been around for 15, 20 years. They're not going to get sort of sold. They're not going to get bought, and so IPO is the next best option for them. And so I think companies like Discord, like Strava, who we've talked about on the show before, they aren't going to be the biggest IPOs, that's for certain, but it's just whetting our appetite for the grand events, which are certainly SpaceX and maybe even Anthropic. Maybe we'll see a sprinkle of Databricks in there. We'll see. Those will be the big time events.
Okay, so Martin, you're chuckling. So do you agree with this?
I mean, yes, but I would put it a bit more directly. I think the question is not whether or not the company should go public, as to whether or not investors should buy into these companies. And I would definitely say, if you look at the track record of some of the companies we've seen going public over the last decade, I'm thinking of Snap, I'm thinking of Pinterest, of Dropbox, these companies which have just dead in the water, the stocks haven't moved for years. I would say, do not go anywhere near Discord. That will not do well. Strava, I doubt, will also do well. That is the real issue. It's, the companies, obviously, they have their own reasons for going public. It's because of the investors want to get out. But really, investors should not buy into these companies. Warning.
Wait, now you're kind of cherry picking the consumer companies here, Martin.
Well, because they have the worst track record of all, right?
But Martin, you would have missed out on AppLovin and Robinhood and some
Well,
of
they're
these.
not really consumer names,
No,
but you are right. There's obviously these other companies which have which become meme stocks and do really well, and you can't always predict those ones. But I think we can predict that Discord, in particular, is not going to do well. It's a social media kind of company with a very small business. It's been hanging around. They obviously have to go public because their investors are really desperate to get out. But believe me, that will be a disaster.
I'll
Okay.
just
I mean, I predict
I'll
this
just
is
let
this is
listeners
the
to the
stock.
show know that
This is
Martin
what will
also
happen.
dissuaded you from buying Reddit, which is up 7 times
Can I
since
just
its
point
IPO.
out that, Corey, you agreed with me at the time. Reddit, I did get that one wrong. I still think that's a bit overvalued by a huge amount, but true. I get things wrong occasionally, but I'm always happy to admit that.
Yeah.
I don't think I'll be wrong about Discord, though,
I mean, you don't even have to go. I mean,
or even Strava.
let's remind listeners that you don't even have to go back to Snap, and you don't have to go back that far to kind of see that a lot of these sort of hot tech IPOs have just performed terribly over the past year. I've written about this phenomenon. Companies like Chime, like even Wall Street favorite Figma, even StubHub, even Navan, these companies are down 5, 10, 20, 30, or 40% since their IPOs just in the past year. So not a good investment. Not a
Corey, what about Kraken? I mean, Circle had a big debut, but I mean, Coinbase hasn't done that great recently, at least. What do you think Kraken should do?
I mean, crypto companies, sort of have done well generally since going public, but Kraken, is going to be comp to Coinbase. Coinbase has just been okay, over the past couple years, and so that's not great news for them. If they're in the stablecoin business, then it seems like it'll be a good listing, but just broadly, the crypto market is it's just doing okay.
And Martin, I mean, some of these companies, I'm looking at, names like Crusoe. I mean, in terms of the reasons why companies should go public, raising capital is obviously one reason. So as you look at some of the names on this list, I mean, Crusoe, some of these AI companies, data center companies, I mean, they need the capital, right?
They need the capital. I would be very careful about Crusoe, Lambda, all of these companies that are around the AI infrastructure market. I think the investor, um, enthusiasm about those companies in the public market has dissipated a bit. And I mean, I haven't seen the financials yet, but I'd be wary.
Look, Corey, what is the alternative then for these companies that you've written? They've been around for 15, 20 years. In some cases, I think you've called them the geriatric companies for the IPO slate. I mean, so I'm an investor. I've been an investor in this company for 15 years. I mean, where do I look then? The secondary market? I mean, how else do investors get their money back?
There's really no other way. I mean, the secondary market really only exists in a functioning format um, really hot companies these days. The top 10 most sought after private companies are really the only company like your Stripe or Databricks or SpaceX. That's where there is a secondary market. There's not really one for Discord. So, you just have to have a short memory if you're an investor in Discord and forget that your company turned down a sale to Microsoft several years ago, and hope the IPO goes well, and hope you can have a good story to tell about future business streams and stuff like that.
And,
Or
the other thing, Akash, is that the early investors probably bought in at a very, cheap price, and they may be able to get out, and recover the money. The point I'm making is that, public market investors should not be buying in because they will be the ones who won't do well.
right. Martin, there was a good question from a reader that I want to ask you, and then Corey, I'll come to you. The reader asked on the article today: is the data center market a winner take all market, or can all of these IPOs coexist? What do you think the answer to that question is?
I definitely do not think it is a winner-take-all market. There are many companies operating in that arena. I really think you have to look at the individual companies, how they've finance themselves, and just what their, relationships are like, but, I'm not an expert on that, but I cannot imagine that there's gonna be one company that does really well out of that.
Corey, what do you think?
Yeah, I think investors are gonna have to get more sophisticated on assessing sort of uh, contract structures that a lot of these neo clouds have with some of their big customers. That was what a lot of the discussion was when CoreWeave went public last March. Was okay, regardless of how you feel about the AI boom and whether it's going to go bust and whether that's going to leave you holding the bag with CoreWeave. Hey, they do have these like 3 to 5 year contracts with Microsoft or OpenAI or whomever, and that's going to at least assure some certainty around their future revenue. So I think investors with Lambda and Crusoe are going to be assessing that. They're going to be assessing access to power. I don't think it's a winner take all market, but these are certainly the companies where there's going to be some of the heaviest debate because they have debt. They're such a derivative of the broader AI market overall.
Great. Well, we like debate. And so if those names do head out, I look forward to having both of you back on to talk about whether or not they should or should have not taken to the public markets. I want to thank you both for coming on. That is Corey Weinberg, our Deputy Bureau Chief of Finance, and Martin Pierce, our co executive editor here on TITV.